Hi, I'm John Stevenson, the Guaranteed Retirement Guy, and today we're going to be talking about the potential benefits of owning multiple annuities. So I have clients who reach out to me and they'll purchase one annuity, and some of them will purchase 5 annuities. And for what reason? Well, it really depends, of course, on your circumstances. Some people have more money than others, but some people just want to spread out their annuity contracts so that they can activate income at different times. You might have $500,000 and you put it all into one contract and give yourself immediate income or maybe deferred income, and it'll give you a ton. Okay, and it's a great strategy. But then, of course, you might be thinking about inflation, or maybe you're married and you've got a spouse who has Social Security income as well. And of course, if you pass away, maybe your income is higher from Social Security, but she'll lose hers. Well, that could be a problem, right? Because now all of a sudden the income will be cut because now she only has one Social Security stream coming in. And of course, she needs more income at that point. And having another annuity contract or multiple annuity contracts in place for events like that, or even for long-term care, can be very, very beneficial for your retirement planning. Okay, so I'm going to share my screen and I want to kind of go through some scenarios of why multiple annuities can be beneficial. All right, so what I did is I just went in here and we're just looking at $100,000, okay? $100,000, and we're taking income at age, let's say 57, okay? Immediate income, and we're looking at, from $100,000, it's $6,700 per year, all right? Okay, well, what if I were to change that? What if I say, you know what, I don't need income right now, I'm gonna take it at 62. Okay, great. Well, let's look at 62. 62, we're getting 11,746. All right, so I'm going to put 100,000 in right now, and I'm going to take income of almost $1,000 a month for the rest of my life, starting at 62. Okay, and I'm going to take Social Security. Great, and that's enough for me at that point. But at 65, I am going to quit my job because I'm not going to quit my job at 62. I just want to take my Social Security at 62, and I want to have extra income from my annuity. But I'm going to quit my job at 65, and I'm going to have to start paying for Medicare because I want to have all these Advantage plans, so I need more income. So I'm going to put another $100,000 in. In fact, you know what? I'm going to do more than that. I'm going to do $300,000 in that one because I'm going to quit my job completely at age 65. So I need more income at 65. So I'm going to fund an annuity right now, a contract for $100,000, and I'm going to activate that income at 62. And then I'm going to fund another annuity contract right now for $300,000, and I'm going to activate that income at age 65. Okay, well, what does that look like? Well, for $300,000, now, of course, it's significant. We're looking at, $42,000. That's huge. Okay, so $42,000 is the highest payout with Equitrust, and that's on top of the almost $12,000 that I'm getting at age 62 from my first contract. Now we're looking at $54,000 per year in income. That's awesome. So we're thinking about that like, wow, all right, so I've got this income coming in, I've got my Social Security income coming in, we're good. But let's say down the road, I might need more income. Maybe, maybe my spouse loses their Social Security when I die and they need some sort of income to cover that. We can absolutely plan for that. So let's look at that. We'll say, all right, well, for that one, we don't need as much. We'll just put another $100,000 in here. So you can kind of see what I'm doing. I'm spreading this out over $500,000. So let's say you've got $500,000 you want to invest into annuities. You put $100,000 in to activate income at age 62, another $300,000 in to activate income at age 65, and then you put $100,000 in just for a fail-safe, okay? Just for something that if you were to pass away later on, okay? We don't know how later, but let's say you're 57 now and you'll pass away when you're 85. Okay, and you want to make sure you get the highest income from a $100,000 investment now. Well, what does that $100,000 do if you pass away 29 years later? Well, right now, American Equity is paying out $32,365. That is huge. And that's only because they're giving you a 6.5% roll-up rate for 20 years. That's why they're paying out and they're beating out everybody else. I mean, there's so many options out there. If you're looking for highest, $32,000. That's huge. So now you're replacing, and we can go over this. If you're not sure exactly what your Social Security income will be or what will be lost at that given age, then we'll just look at a calculator and we'll factor in inflation, because typically Social Security has raised their income streams usually by 2% every year. It just depends. Obviously, high inflation years that we've had in the past, they've raised it higher. But if we just look at those numbers, we can calculate, and I'll do it for you. We'll calculate exactly what that income need, what the loss would be if someone were to pass away and you need to replace that Social Security income. We'll look at exactly how much income would need to be replaced. And then, of course, how much you would need to invest into an annuity right now in order to bridge that gap later on. Okay. So there's a lot of good things you can do with multiple annuities. Now, I have clients also who reach out to me and they're like, well, I want my income set up, John. Okay. I want my guaranteed income set up for me, but I also just want to have some growth over here for my kids. I want to leave some money behind to them. I don't need all this money. Okay. I've got plenty of money. And so I've got some income annuities set aside for me, and I've got some growth ones set aside for them. We can do that. Okay. We can look at a fixed index annuity that are tied to indexes that'll give you growth. And if the market does well, you get decent growth. And of course, if the market goes down, you don't lose anything. But we can also look at MYGA, multi-year guaranteed annuities. Let me show you those real quick, because obviously right now rates are good. And of course, they're changing right now. The Fed just lowered their rates. Right now, you can see the 2 years, 5%. But let's skip all the way up. I mean, a lot of these are 5% they're paying out. Let's look at the 10-year. Look at here, Equitrust paying 5.45. Now that's, as of the recording of this video, it will be lower by the time you reach out to me. I'm sorry, but Feds are lowering their rates, and they already have, and Equitrust, I know, is going to lower some of the rates. So Exonic Insurance is right behind at 5%, and Harborview is at 4.95. So that's pretty good. If you're thinking, all right, I just want to lock in, a 5.5%, $100,000 is going to be worth $170,000 guaranteed in 10 years. And then you can roll it into another contract, and then into another contract, and just keep doing it for your posterity, for your kids or your beneficiaries, your charity, whoever you want to leave the money behind to. You can do that. And so I will have people reach out to me, and they'll set up multiple contracts for different reasons. They'll set up contracts for income now, for income in 5 years, for income in 10 years and 20 years. Okay, they'll ladder out those annuities. And then they might purchase a few annuities over here for maybe just fixed index growth. They want to have index growth, maybe S&P 500 and NASDAQ, Russell 2000. Okay, they might want some of those indexes, but they don't necessarily want to participate in any of the risk of the market. Okay. Well, we have annuities for those. Okay. We could put you in that. And of course, you got multi-year guaranteed annuities, which are just like CDs, which I just showed you. And those will give you, of course, whatever that fixed rate is. Of course, the downside for those is if the market is roaring and it's going great, you miss out on a lot of growth. Okay. And vice versa. Of course, the market's dropping down. The nice thing about MYGAs is you get a fixed rate of return regardless if the market's down. So just, different strokes for different folks. Just depends on what you're looking for. I can show you everything. Okay. Book a call. There's a link below this video, and it'll go straight to my calendar. Okay. We'll talk about all of your annuity needs. If you're looking for one annuity, if you're looking for multiple annuities, we'll look at a strategy that works just right for you. Okay. I'm happy to help. I'm not going to try to sell you anything, but I will show you everything that's available. And of course, I'd love to help you purchase an annuity. I can do that for you, and I will show you the best options regardless of what I'm getting paid. Okay. So transparency is super key here. Again, there is a link below this video. Go to my calendar, and we'll get on a Zoom call and we can chat. So again, I hope this video has helped. I hope it's given you some value. And if it has, I hope you I hope you subscribe, hope you share it. And if you've got questions, I hope you leave some comments below. So I'd love to help. And again, thanks for watching, and we'll see you in the next video.